Have you ever wondered how a conflict thousands of miles away could directly hit your wallet? Let's talk about something serious but crucial. The potential economic fallout for Asia if the tensions between Israel, the US, and Iran were to escalate into a full-blown war. This isn't about fear-mongering. It's about understanding the intricate web that connects global politics to our daily lives, from the price of gas to the value of our savings. First, let's set the stage. The Middle East, particularly the Strait of Hormuz, is the world's most critical oil choke point. Think of it as a superhighway for oil tankers. A staggering 1/5 of the world's total oil consumption passes through this narrow waterway every single day. Now here's where it gets personal for Asia. Countries like China, Japan, South Korea, and India are massively dependent on oil imports from this region. We are talking about nearly half of all the oil passing through the Strait of Hormuz, heading directly to Asia. So, what happens if this superhighway gets shut down? A war involving Iran would almost certainly disrupt this vital supply line. Iran could close the strait, or the conflict itself could make it too dangerous for tankers to pass. The immediate result? A massive oil supply shock. We saw a glimpse of this during past Middle East crises, but a direct conflict involving Iran would be on a whole different level. The law of supply and demand is simple. When supply plummets and demand stays high, prices skyrocket. Analysts predict oil prices could easily surge past $150 a barrel, with some worst-case scenarios even suggesting $200 or more. For Asian economies, this would be a devastating blow. Think about it. Higher oil prices mean more expensive gasoline for your car, higher electricity bills for your home, and increased operational costs for virtually every business. This leads us to the second major impact: inflation. When the cost of energy goes up, the cost of everything else follows. Companies have to pay more for manufacturing and transportation, and they pass those costs on to us, the consumers. The price of your groceries, your clothes, your electronics, everything would start to creep up. This isn't just a minor inconvenience, it's a direct hit to your purchasing power. Your salary suddenly buys you less than it did before. Central banks across Asia would be in a tough spot. To fight this rampant inflation, they'd likely have to raise interest rates. Higher interest rates are a double-edged sword. While they can help cool down inflation, they also make borrowing more expensive for both businesses and individuals. Companies might delay expansion plans or even lay off workers because loans become too costly. For ordinary people, mortgages and car loans become more expensive, squeezing household budgets even further. This combination of high inflation and high interest rates could easily slow down economic growth, or worse, tip economies into a recession. Now, let's talk about the stock market. Markets absolutely hate uncertainty, and war is the ultimate uncertainty. The moment a conflict breaks out, you can expect a massive sell-off. Investors would panic and rush to pull their money out of what they perceive as risky assets, like stocks, and move it into safer havens like gold or US government bonds. For Asia's stock markets, this would be a bloodbath. We'd likely see sharp declines across major indices in Tokyo, Shanghai, Seoul, and Mumbai. Companies that are heavily reliant on oil, like airlines, shipping companies, and manufacturers, would be hit the hardest. Their stock prices would plummet as investors factor in the cripplingly high energy costs. This doesn't just affect big-time traders, it impacts anyone with a retirement fund or savings invested in the market. The value of your nest egg could shrink dramatically overnight. Furthermore, a global economic slowdown triggered by the oil shock would crush demand for Asian exports. Countries like China, the world's factory, and export-oriented economies like South Korea and Taiwan would see their orders dry up. The United States and Europe, also struggling with high energy prices and their own economic problems, would buy fewer goods. This drop in exports would be another major drag on Asia's economic growth, leading to more job losses and business closures. Let's also consider the ripple effects on specific industries. The shipping industry would be in chaos. Insurance premiums for tankers traveling anywhere near the conflict zone would go through the roof, assuming they could even get insurance. Many shipping routes would have to be rerouted, adding weeks to journey times and massively increasing costs. This would further snarl global supply chains, which are still fragile from the pandemic. Remember the shortages and delays we experienced a few years ago? Imagine that, but 10 times worse. The geopolitical landscape would also shift dramatically. Asian governments would be forced to navigate a treacherous diplomatic path. Alliances would be tested. Countries heavily dependent on US security and Middle Eastern oil would find themselves in an incredibly difficult position, caught between major world powers. This political instability only adds another layer of risk and uncertainty for businesses and investors, making them even more hesitant to commit capital and create jobs in the region. So, let's piece it all together. A war involving Israel, the US, and Iran is not just a distant news story. It's a direct threat to Asia's economic stability. It starts with a catastrophic oil price spike, which triggers rampant inflation across the continent. Central banks respond with higher interest rates, choking off economic growth. Stock markets crash, wiping out trillions in wealth. Global trade slumps, crippling Asia's export-driven economies. It's a domino effect where each piece that falls makes the next crash even harder. This isn't a prediction, but a cautionary analysis of the potential risks. The interconnectedness of our global economy means that a fire in one part of the world can quickly spread smoke across the entire globe. For Asia, which has been the engine of global growth for decades, the economic consequences of such a conflict would be profound and long-lasting, affecting everyone from factory workers to office employees to retirees. It's a sobering reminder of how fragile our global economic system is and how much we depend on peace and stability in regions that might seem far away. Let's hope that diplomacy prevails, because the alternative is a price that none of us can afford to pay. Thanks for watching. If you found this analysis insightful, please give this video a like and subscribe to the channel for more deep dives into the events shaping our world. Stay informed and stay safe.